Hello, everyone, and welcome back to another episode of Majlis and Markets. As always, I'm your host, Hassan Jivraj. Really happy to be doing another episode on YouTube. I think we're at episode 69. And I'm really happy to be back doing another episode with Odilbek Isakov, who I'll talk to in a minute. But please, before we begin this podcast, remember to like, share, and subscribe, and also subscribe to all of our social media channels at Majlis and Markets. But now I'd like to introduce my guest for the second time, Odilbek Isakov. Odilbek, welcome back to Majlis and Markets, part 2.
Thank you so much, Hassan. Thank you. Thanks for the invitation.
Odilbek, we did. I think we were episode 3 with you back in December 2023, and it's one of our most listened to episodes. And I always get messages from people in Uzbekistan and Central Asia, and indeed across the world, saying that they really enjoyed this episode and the insights you gave us to Uzbekistan and what's happening over there. And a lot's happened since December 2023. The world's in a very different place right now. We've got Donald Trump running the US, and we've got other interesting things happening in the world. Some good, some not so good. But before we get into Uzbekistan and what's happening since we last spoke, Odilbek, tell us what you've been up to since the last podcast.
Since the last podcast, I've been mainly focusing on my advisory business. So corporate finance advisory and infrastructure finance advisory, 2 companies. And we've been quite busy actually in Uzbekistan bringing debut issuers to capital markets and also helping investors to do infrastructure projects under public-private partnership modality. And mostly focused on Uzbekistan, although we may also look at other markets, but Uzbekistan has been keeping us busy and our team has been growing. So quite
amazing.
Busy year and a half since we last spoke. And so far so good.
Yeah, no, it was really, I think the first episode that we spoke on, it was really interesting to get an insight of what's been happening since 2016-17 with the new president and his agenda and everything, and the role that you played in helping open up the financial system and the financial markets and the capital markets in Uzbekistan, and people getting to know Uzbekistan a little bit better than before. But Odilbek, what do you think of Uzbekistan right now, if we're speaking in July 2025? The world has been in a bit of flux since the election of Donald Trump in November 2024, and then obviously the Trump tariffs in April. Give us your thoughts, your high level thoughts to begin with. What do you think so far of what's happening in Uzbekistan since we last spoke?
Look, I mean, since we last spoke, the growth has continued to be one of the main drivers of reforms. We had 6.3% GDP growth in 23, 6.5% in 2024, and 7.2% in the first half of 2025. Economic growth has been one of the key, I would say, outperforming numbers compared to the region, compared to what's happening globally. And Uzbekistan is coming out of this geopolitical crisis relatively unscathed. Trump tariffs, of course, causing global volatility. Capital markets are not that easy, however, accessible. And to some extent, capital markets got used to this volatility. And you've seen the numbers in the first half that many, many transactions have happened. But I think if you compare Trump tariffs' direct impact to Uzbekistan versus the war that's happening in Russia-Ukraine war, the latter has more impact on the overall economic growth and the trade and other, because we have a very limited trade links with the US. Although it's growing. Investment links are quite strong. As mentioned, especially in the capital markets front, sometimes 30-40% of investors come from the US. But US investors are also very much sophisticated investors. They understand the issues and they've been investing for a while. Despite the fact that we've had certain limitations in our trade, obviously sanctions imposed, we cannot trade with Russia like we did before. Nevertheless, the government has really worked hard to introduce measures and diversify the trade. So one of the key, and China has always been number 1, number 2 trading partner, but one of the key, let's say, changes was Middle East. So GCC trade has gone up significantly. Investments from the GCC has gone up significantly. And also trade with neighbors, trade with Afghanistan, trade with Central Asian neighbors, and also European route has grown significantly. So yes, the global volatility is causing certain issues, but Uzbekistan is, especially the foreign policy, has so far become very much friendly terms with everybody, looking at the east, looking at the north, looking at the west, looking at the south, immediate neighbors, and also larger neighbors, larger regional players. And Uzbekistan is friendly with everyone. So we have, no problems with any major power or no problems with any of the neighbors. And as such, this is really stimulating the growth, and this is really helping build transport corridors. For example, for the first time ever, Uzbekistan and China will get connected through Kyrgyzstan. So Uzbekistan, China, Kyrgyzstan rail network is being built as we speak. Previously, we used to cross Kazakhstan and quite a bit of journey before we reached China. But now it's through Kyrgyzstan. That would be the shortest way. Now Uzbekistan is actively pushing Trans-Afghan Railway, which is another important journey to the sea. This is the shortest way to the sea, and as such, with now Taliban government has been pretty constructive in terms of the relationships, in terms of developing its own infrastructure. So Uzbekistan is pushing this transaction together with the government there, and of course there are several other regional and international players also have been quite supportive. So Trans-Afghan Railway will be another game changer. Uzbekistan is also actively pushing middle corridor, which is obviously through Turkmenistan and Caspian Sea, Azerbaijan, and of course Georgia and to the Black Sea. So that obviously also another key diversifying route for Uzbek exports and imports, which will obviously reduce the reliance through the Russian ports, which currently before the war accounted for 90% of our trade. So that's on the trade. I mentioned about the growth. Inflation has been relatively stable, single digits, despite the fact that we've had energy reforms and there was a one-off effect of the energy prices to the inflation. But again, given the volatility in the global markets, given the fact that, over the last 3 years, the cost of money has increased as well, right? I mean, but Uzbekistan has managed the impact of imported inflation relatively well. And first and foremost, it's through reforms, through efficiency in the economy, more and more private participation, because obviously efficiency in the private sector is much higher than in the public sector. And as such, private sector driven reforms are continuing. I can give you a couple of examples. For example, there were in the last year, 12 months, I can give you four important legislative pieces which really cements the importance of private sector in the respective areas. For example, law on electric power, which was passed in August 2024, established competitive electricity market and regulates electricity power sector. So basically, Uzbekistan will move from regulated electric pricing to market-based pricing, where independent power producers, private sector, will have a more role to play and of course to set the prices. Also, there was a new edition of railway transport law passed in November 2024. It promotes market principles in railway transportation and also encourages private entrepreneurship. Before, only government trains were running the whole thing, right? Whether it's freight or passengers. Now, private sector is also able to use the rail network, and this definitely enhance, especially for a double landlocked country, railway transport is very, very important. There was new edition of telecommunication law, and also again to establish regulatory framework, simplifying licensing procedures, enhancing infrastructure development, and also opening the market for private sector. And last but not least, there was a new edition of the law on investments and investment activities, obviously protecting investor interests, protecting minority rights, and so on and so forth. So there's this sort of key reforms really establish where the country is moving forward and where the country is relying on not just public finance sector investments, but also private sector investments and attracting lots of private investments as a result. So that's
Odilbek,
probably the summary of what's happened over the last 18 months or so.
That's really great, and I really want to unpack some of that. But Odilbek, from your perspective as an Uzbek person, and someone who served in the government previously, and you're very well informed about the economic situation in Uzbekistan and Central Asia. How do you view Donald Trump's view on the world in terms of trade? What do you think? How do you think Central Asian countries and Uzbekistan included are dealing with the new Trump administration?
Look, I mean, the government is handling it very well, right? It's only 10% tariffs that he's imposing on Uzbekistan because there is no trade deficit against Uzbekistan. So I think Trump is not very much worried about tariffs on Uzbek goods and services. Some people, especially in the textile industry, they think it's an opportunity because Trump is introducing less tariffs on Uzbekistan than some of the other countries which are big on exports. Obviously, China is number one, but also Bangladesh and India and Pakistan and other Turkey, other large textile exporters. So some business circles are rather positive in a way that we can push more Uzbek goods into the US. But if you look at on the political level, of course, this will have an implication on the global supply chain. This will have an implication on our trading partners. Not necessarily, we will not be directly impacted, but we will be, of course, indirectly impacted because our trading partners, our investment partners will have obviously difficulties to be competitive in the US market, which will impact the bilateral trade with these countries. And even more direct impact would be that Trump's tariffs will be, of course, inflationary in the US. Back in September last year, we were expecting 4 to 5 interest rate cuts in 2025. And of course, we only had 1 or 2, right? And maybe 1 or 2 is expected by the end of this year, again, depending on the data. So from that point of view, US interest rates have a global impact, especially for countries like Uzbekistan, which is borrowing money from abroad, which is obviously issuing bonds. And also it will impact the FDI levels as well, because in any FDI situation, you're going to calculate your weighted average cost of capital based on risk-free interest rates. So it's all getting impacted again by these sort of policies. But what I can say, Hassan, is that compared to some of the other challenges that Uzbekistan went through, the people went through over the last 30 years or so, this is not something that is too critical. And people don't really discuss Trump tariffs, for example. For people, it's more important, let's say, obviously, when we had in June events in 12th day Israel-Iran war and Trump's interference, that obviously scares people because it may have led to major escalation in the region. So that would be more worrisome to people and to the country as well than the trade policies.
One thing, Odilbek, we had a guest on a few episodes ago talking about the BRICS summit in Brazil, which took place last month. And, we talked a lot about de-dollarization, and a lot of global South countries wanting to join this new attempt of a new world order. How does Uzbekistan view the BRICS cooperation and alliance? Is it in favor of that, or do you think it's more to a US-aligned world order?
No. Of course, Uzbekistan, among the BRICS countries, Uzbekistan is obviously 2 largest trading partners, Russia and China, right? And of course, India is also quite an important country in the region, quite an important partner for Uzbekistan. So out of the 5, we already have, with 3, some sort of bilateral or multilateral discussions. And there is also Shanghai Cooperation Council. This is Central Asia plus Russia and China initially. Now more and more countries are joining, including India, Pakistan. Iran is one of the observing countries, if not their full member. And I think some of the GCC countries were also attending the meetings. So although, from that regional perspective, it's important. Globally, it's also important. And then I think for Uzbekistan, the government, in my understanding, they never say, BRICS versus other, let's say, multilateral organizations, if you know what I mean. So Uzbekistan within BRICS, if it's in their interests, Uzbekistan will deal with them. In my opinion, if it's with NATO countries, we can deal with NATO. We can deal with other US-led organizations or US-led multilateral financial institutions. So here it's not about putting one versus the other. Here it's about, okay, these organizations exist for a purpose, right? And of course, instead of taking sides, it's about finding the right instruments to cooperate with these organizations. You cannot ignore them. You cannot just, it doesn't make sense for Uzbekistan to ignore any of these organizations. For Uzbekistan, it's basically making sure that if we are in it, yes, we are in it, like in Shanghai Cooperation Council. But if you're not in it, then it's about making sure that there are enough instruments for cooperation to protect Uzbekistan's interests and also to, of course, enhance the trade, investments, and so on.
That's really interesting. Odilbek, if we just switch gears a little bit and look at the more domestic situation economically in the country, we talked a lot last time about how the country's been opening up since 2017 and made a lot of reforms, and you played a big role in all of that as well, as I mentioned before. But in terms of the reforms, Odilbek, one of the things people have mentioned to me when I mentioned I was doing part two with you was about the privatization drive. Obviously, we saw Franklin Templeton, I think, was appointed by the government to help privatize some of these state-owned companies. I mean, do you have any thoughts on the role of international partners in the privatization of different sectors within the economy?
Yeah, of course. Look, I mean, this is an important milestone. I mean, Franklin Templeton's involvement in Uzbekistan's privatization effort. National Investment Fund, which is obviously fully state-owned, was created, and 18 SOE shares were transferred to National Investment Fund, and Franklin Templeton's ambition is to list those shares in international and domestic market, and also make sure that Franklin Templeton will see value to increase the value of the fund. So in order to increase the value of the fund, then Franklin Templeton needs to, obviously, as trusted manager of the fund, will help the government to implement certain transformational policies in the country and also within each of these SOEs or state-owned banks, because they represent pretty much most of the major sectors of the economy: the energy, the transport, banking sector, and so on. So in my opinion, with Franklin Templeton coming in, potentially appointing board members, potentially appointing C-suite in these companies, making sure they improve corporate governance. They want to implement OECD corporate governance standards within all of these companies. Most of these companies have IFRS, but those who don't, then obviously they will be transitioning to IFRS, integrating ESG principles, and so on within these companies in order to increase the value of each company individually. Once each company's valuation goes up, then of course the fund value will go up as well. More or less the same thing that Uzbekistan has been trying to do since 2017, implementing all these good things. Ministry of Economy and Finance has been one of the major supporters of this. But now we have, the government has a dedicated international reputable firm who's helping government do that. So it's pretty important step. Apart from that, privatization is accelerating in Uzbekistan, because obviously smaller assets play an important role. When I was in the government, when we did the stock taking exercise in terms of how many government-owned entities are there was 3,200 of them. Quite a number of them. These companies, some of them are just real estate, some of them are just shell companies. They were opened for one reason or another. In order to be able to effectively withdraw state from the economy, you need to go through the exercise time and time again of trying to sell those assets, market those assets. And there were some large privatizations, there were some smaller privatizations as well. But again, I mean, there are many factors. Privatization takes time. It's not like fire selling everything and basically getting rid of it. The value that it has, it's about more looking at the assets carefully, thoughtfully, and making sure that these assets are sold to the right owners, make sure that it gets paid. So I have some numbers here. If you look at the numbers between 2010 and 2019, the total amount of proceeds from privatization was 1.2 trillion sums. I know there's inflation effect, etc., but nevertheless, the numbers went up from that amount. In 2020, it was 1.2 trillion alone, and then it went up to 10 trillion, then 17 trillion, then 20 trillion, 26 trillion, and this year's target is about 40 trillion. 40 trillion is about, give or take 3.2, $3.3 billion, right? It's not a small amount, and this is combination of local businesses and individuals buying assets, and also foreign. And obviously, there's been a number of large ones which are like headline driving privatizations happened over the course of this period. Coca-Cola Uzbekistan sale, Ipoteka Bank sale, Fergana Azot, Fergana Oil Refinery, and some of the hotels and the bank, a smaller bank, and there is more that Mr. President approved to be sold over the course of this year and next, and especially important, largest telecommunication operators called Mobius, or the largest insurance company, Uzbek Invest, or if you look at largest leasing company, Uzagra Leasing, and many others. So there's a lot of assets government is putting for sale, but as you know, the sale process takes time. As you know, that the sale process requires quite an important due diligence from potential bidders. There's legal and other elements. That's why it takes time to sell any asset. And also, you need to get the right price, right? Right valuation. You cannot just sell it for any price that anyone offers. So that's why I think privatization, alongside the listings are happening or planned. So I think this drive will continue to be quite strong in the coming years. And talking about the listings, I mean, I talked about Franklin Templeton's own let's say plans, but also there are other large state enterprises which are currently being prepared for listing. Mr. President counts probably 10 of them to be listed between now and 2030. So it's a process that takes time, but clearly, by 2030, I think I'm hoping to see maybe half a dozen Uzbek companies listed in foreign stock exchanges.
Just speak on the back of the foreign stock exchange, Odilbek. Do you think, like, which exchange do you think offers the best from an Uzbek perspective? Do you think it's to be based in London, or do you think New York, or even other places as well?
London is definitely more sensible, because obviously, London is a place which from Central Eastern Europe, Middle East and Africa, from that point of view, makes most sense. Lots of investors know Uzbekistan already because most of the bonds are listed there. And also, they understand Uzbekistan. They come to Uzbekistan quite often. So London makes sense. But for smaller listings, I would say Abu Dhabi or Dubai. I mean, these two exchanges also offer value. I heard one of the largest FinTech ecosystem companies in Uzbekistan, it's privately owned, Uzum. They have plans to list in Abu Dhabi. I think that's, and their mother company, I mean, the holdco is in Abu Dhabi as well, so that kind of makes sense. But nevertheless, I think if they can get successful listing as and when, I think this will definitely follow, especially from the private sector.
I'm just looking in the background. You have your CFA charter holder certificate in the background, and obviously with your banking, we can see it very beautiful, and your banking background, of course, before your government days. From a debt perspective, Odilbek, how would you characterize Uzbekistan's external and public debt situation at the moment?
Very stable, resilient, 35% debt to GDP. I mean, state debt to GDP, that includes foreign and domestic debt. Because GDP is growing, it's creating lots of headroom for borrowing. Government has been very prudent in terms of capping the debt that they borrow over the course of the year. There are fiscal rules, debt ceiling at 60%. And Uzbekistan is far from reaching that debt ceiling. And if you look at IMF's most recent report, it says also the risk of debt distress is low. And if you look at the credit rating agencies, Fitch just upgraded Uzbekistan from BB minus to BB, so notch upgrade. That was less than a month ago. And Moody's and S&P put outlooks from stable to positive. So I'm hoping that if things go as planned, both S&P and Moody's may also increase in the next 12 to 18 months. So it's definitely improving credit. Rating agencies or IMF or other research, if you look at that, everyone is pretty comfortable with the debt situation, the way that government is managing its debt situation. And to be frank, 35% is a pretty decent place, pretty decent, I would say, on the low side if you look at the BB rated country peer group. But if you look at overall emerging markets, it's moderate debt levels.
And do you expect that to go up in the medium to longer term in terms of GDP?
Probably not much. Yeah, even if it does, maybe up to 40%. Again, I mean, provided that the GDP continues to increase, 7.2% is amazing. I think if 25, Uzbekistan grows by 7%. I think that would be first after 2021, post-COVID growth, it was 7.4%. I think if Uzbekistan continues to grow 6, 7, 8% type growth, I think that the GDP level would probably stay relatively stable. And FX as well, because obviously a majority of the debt is denominated in foreign currency. And if you look at the FX, over the last year and a half, it's been relatively stable, especially this year. It's been, usually you have some slow depreciation trend, but this year we've seen appreciation as well. It's pretty much where we were, at the start of the year.
I remember I was catching up a while ago and you were talking about the sustainable bond I think Uzbekistan issued. Was it a sustainable or green bond they issued? They've issued before,
Both
right? Both.
SDG and green bonds.
Correct, the SDG one. Another thing that came to my head was these things like these newer instruments like blue bonds or debt for nature swaps. Uzbekistan, I remember in our last conversation and when we met up as well before, Uzbekistan is facing challenges with climate change and environmental challenges. Do you think like instruments, things like blue bonds or debt for nature swaps could be on the cards for Uzbekistan in terms of managing its challenges?
It's a good point. Obviously, debt for nature swaps. Even during my time as a deputy minister, I've heard about this. We've discussed with some of the banks or international financial institutions who's done it. But we don't, at that time, my response was, you know what, we don't want this to lead to any kind of debt restructuring for Uzbekistan. If it leads to that, then obviously it will have a negative implication on the ratings, on the credit story and everything. So that's why at that time, it was very new and not many people tested it. Even now, I don't think lots of people tested it. So we need to be a bit careful here. Obviously, I'm no longer in the government, but I still would like the government to make sure that they follow the instruments which are the green bonds or SDG. Uzbekistan has an important let's say, reputable track record of issuing those and reporting, where the money went and what kind of impact it had. So it's impeccable record. But for other new instruments where kind of debt nature swaps or restructuring certain things, there needs to be a little bit more careful approach to make sure that investors' rights are fully protected. They don't lose money out of it. So it needs to be sort of, if investors are also happy for one or another reason, then it's a different story. But I think at this very moment, it would be not so prudent to make investors unhappy. So it needs to be whatever Uzbekistan does and whatever any emerging market countries they do, they should protect the rights of the investors, debt or equity, to make sure that this reputation, this credit worthiness stays and investors are happy with that.
Just shifting to the banking sector, obviously we talked a lot last time about the banking sector and you've talked about some of the privatization. Right now, Odilbek, with the banking sector, how would you characterize the sector's performance right now?
Very strong, I would say. If you look at the overall capitalization, it's pretty strong. Average around 17% tier one capital. Profitability has been on rise as well, especially among private sector. One thing I've noticed in the last 5 years is that previously top 10 banks were all government owned. Now in top 10 banks, 3 of them are not government owned. Private sector banks are increasing in share, which is also quite positive to see. So it means that reforms are working. It means that government wants to see more private sector engagement in the economy. Now it's happening. So to give you an example, 80% of the banking sector assets were owned by government-owned banks, right? And 20% private. Now it's 60 to 40, 60 government and 40 private. So private sector share has doubled in an industry which is growing very fast. At the moment, banking sector assets are $60 billion. It used to be half of that 5 years ago. So both state-owned banks and private sector banks are increasing lending to the economy and also increasing asset base. The deposits are growing quite fast as well, especially retail deposits, which we haven't seen before, right? Retail deposits currently underpinning. And some of the privately owned banks, they say that they don't need to borrow externally because they're happy with the deposits and they're happy to fund themselves with the deposits, which is probably the healthiest sort of way of doing banking. What else can I say? Dollarization is obviously going down. What used to be like half of the loans, now it's about 40% of the loans in dollars. What used to be 40% of the deposits, now 25% of the deposits are in dollars. So dollarization levels are falling. FX rates being stable really helps. Inflation being stable really helps. Asset quality, I mean, system-wide asset quality was about 4% of the loans as of December 2024. So 4% NPL is also, in a growing economy, it's not that bad. I think, it has gone up a little bit versus 23, but it's not that bad. And central bank continues to be very conservative in terms of monetary policy and banking supervision.
What about things like FinTech? We had the former CEO and co-founder of Alif Bank, who I know who's from Tajikistan and is a Tajikistani institution, but they also have operations in Uzbekistan and quite a large customer base there. And they gave us nice insights into the Uzbek fintech sector. Do you think things like fintech, digital payments, digital assets, these things are growing in Uzbekistan?
Fintech is really growing, whether it's payment systems or a fintech ecosystem. As I mentioned, Uzum is a fintech ecosystem. It's like Kaspi in Kazakhstan. I'm sure you've heard about Kaspi. So Uzum is kind of a similar version in Uzbekistan, but probably a few years earlier than Kaspi. Kaspi started a little earlier. So other payment providers, I mean, there's recently been a transaction where Kazakhstan's Halyk Bank, who has a local bank called Tenge Bank in Uzbekistan, they swapped. So basically, they acquired one of the payment providers called Click. Partially, they acquired their shares, and then partially, and that was one of the largest transactions. I mean, I was really happy to see that transaction, both private sector transaction, nothing to do with the government, and it has also valued Click pretty nicely. I think Click was 49% of the Click was $176.4 million. That's amazing, actually. So valuing the Click at $350 million-ish, $360 million. And then they sold 49% of Tenge Bank to Click shareholders for $60.76 million. Again, it's a good trade. Good transaction. I'm sure they must have some plans, Halyk Bank, to expand their fintech footprint, and Click's owners are all Uzbeks. So we had a similar transaction with PayMe that was back in 2019 or 2020, so that was some time ago. And at that time, PayMe has a larger client base. PayMe was sold $5 million, I think 50% of the shares or something like that. So relatively speaking, back in 2020, it would have been $10 million, $15 million valuation. Now it's 30 times more, which shows how the market grown over the last 5 years. And next 5 years, 2030, if you invite me for another podcast, I'll tell you probably this Click is in billions, and Uzum is already $1 billion. It was $1 billion holding company last year, but now Uzum is probably more than that. We don't know. We know when they IPO it. So whether it's payments, whether it's buy now, pay later type business, or some other type of ecosystem, I mean, fintech is really growing. And I think sometimes, in Uzbekistan, it's easier for me to transfer money or to pay for my utility bills or taxes or other things much easier in Uzbekistan than in the UK. In the UK, it's rather rigid. You don't have that flexibility of paying your utility bills through a mobile phone app of one of the banks. In Uzbekistan, it's really, really flexible, and making payments, receiving payments is very, very flexible. So I think that this is going to grow with AI embedded now, like in many other countries. This has a lot of potential for growth.
Odilbek, you and I come from like a traditional background in the sense that we grew up in probably when fintech was becoming a big thing, but now the younger generation, they're using things like cryptocurrency. Is there a lot of cryptocurrency use in Uzbekistan, or do you think there will be in the coming years?
We also have crypto exchange, believe me or not. And people already using some tokens there. This dollar linked token. One token is $1. I don't know what the name of it.
Is it a stable coin? like a stable coin?
Yeah, probably one of those. This is mostly used in Uzbekistan, and also, I mean, likes of Bitcoin and others also get used as well. As mentioned, there is a exchange, a crypto exchange, which trades crypto. So people make markets, people trade, etc. So, and I think there are some domestic tokens as well, which are being marketed right now. Honestly, I still don't understand how the whole thing works and how the whole thing gets valued. I must say that I had to do more research and understand a little bit more to get to the bottom of the crypto. I have never invested in crypto yet, but clearly there's trillions of dollars right now of crypto market globally, and Uzbekistan is also right now relatively active. I mean, there's more people, some people more active, some people less.
And of course, us being a Islamic finance focused podcast, what are your thoughts on the Islamic finance industry since we last spoke in Uzbekistan?
Oh, there's been some positive developments since we last spoke. Central bank has issued and a we call it central bank's normatives, which is obviously, let's say, central bank's own legislation, right? Central bank has allowed Islamic microfinance banks to operate in Uzbekistan, and they've already written instructions in terms of how this can be operated, what kind of products are allowed, how this can be funded, etc. So it's quite positive first step, I would say, towards sort of introducing Islamic finance for us, microfinance. So microfinance it's retail and smaller businesses, right? Micro businesses. I think it's expected that within the next 2-3 years, central bank would also take the next step of allowing microfinance banks, which are obviously much larger than microfinance organizations. They can take deposits and so on. So I think that would be the next step, and then the last step would be banks. So that is happening right now, and central bank is pretty positive on this, in my opinion. The capital markets, again, in the capital markets law, again, I know that because we drafted it when I was a deputy minister and I was in charge of capital market supervision. And we already embedded Islamic products there in the capital markets law. So I understand it's still there, and this law is currently being debated and going through the chain of approvals. So as and when this law is signed into a law, then capital markets will also have its own Islamic products. Right now, we don't. Only thing we can do is, at the moment, murabaha type financing, which is pretty straightforward, and leasing. So two products are relatively easy to implement under the current legislation, which banks and other financial institutions are doing already, but the rest are still not there yet, when it's not microfinance. So we'll see. I mean, it's a question of time. I think, we've already seen some first positive steps. Iman that you mentioned, I think they also do some sort of Islamic finance. I think it's also buy now, pay later. So, or, I think it's type of murabaha, in my opinion, for buyers. So it's getting there.
One thing you mentioned to me on the podcast that stuck with me was, you talked about banks and financial institutions being intermediaries and, taking depositors' money and investing it and making a return for the depositors and the investors. And I remember you saying, and I think I corroborated this with a report I read from the World Bank, is that Uzbekistan remains one of the more underbanked countries in the world if you compare it to similar rated names. Do you think, like, a lot of people would want an Islamic financial system, or like what I'm trying to get at is, are they avoiding the traditional or the conventional banks because of the whole interest thing?
Some, yes, some people are. I wouldn't say majority, especially the businesses, newly established businesses, especially in urban areas, they're not avoiding per se. It's just that if they put deposit, they put at 0% deposit, right? Where you could earn 20% per annum, you're earning zero because they don't want to earn this interest, right? So if you provide them Islamic products to make this 20% in local currency, they would love to do that. And the number is growing as the population is growing, the businesses and economy is growing. Today's small business is tomorrow's medium business, and today's medium business is tomorrow's large business. So that means that those people, businessmen who have started the work 2-3 years ago, 2030, they will, provided they stay in the business, because economic growth and population is growing, and if they keep the same market share, they will be owning relatively large businesses. There is a clear potential there, and I know a friend of mine who opened Islamic microfinance organization, and they say that people initially do not understand the products. It's not that difficult, but nevertheless, it has its own challenges. It's sort of it's for those people who really want Islamic finance. They're coming and they are benefiting from this. But there is one other thing is, especially for those smaller businesses, there is VAT issue. There is other types of issues which obviously is part of the business. In other words, most of the small businesses, they don't always pay tax as they should be paying taxes, right? But when you do Islamic finance, you deal with the open part of the business, not the hidden part of the business, if you know what I mean. So that's where some people think that it's potentially more expensive than the traditional finance, because there's 12% VAT on things that, if you murabaha, you buy and sell, right? So you buy certain things on their behalf, you sell the client, and they pay you back in installments. It's not just the profit rate, but also the VAT they have to pay. In some cases, let's say if they work in a traditional finance, they just get the money and then they just purchase this whatever they want to buy without VAT. That's already 12% discount. So there are certain things, certain issues, not a regulatory issue, but also sometimes some of the entrepreneurs trying to avoid tax. Sometimes I do not understand that avoiding tax is halal, but earning interest is not. I don't understand that.
One thing I wanted to ask you is, maybe you've answered this already, but like as your time as deputy finance minister and your time as a DCM banker at HSBC, I'm sure you pitched ideas of issuing sukuk to sovereigns, and why has the Uzbek government not really? Obviously, this is your opinion and your knowledge, but like, why do you think the Uzbek government hasn't really issued sukuk? Because to me, it seems like a slam dunk. You've got a majority Muslim population with the Islamic history, triple B rating, as you said, low debt levels. Why haven't they issued sukuk? Because to me, that would make a lot of sense, attracting Gulf money or like Islamic money from outside.
We need to have a legislative base for that, Hassan. And they've been trying to push it last year, this year. One of the reasons why this hasn't happened is, again, coming back to the taxation, because if you want to issue sukuk, then there is sukuk al-ijara, sukuk al-murabaha. Banks who advise on sukuk structuring, they want at least 50% ijara. For that, you need to sell the asset to an SPV. SPV should be ideally in offshore. And when you sell the asset, so one entity is selling the asset to another entity, there's VAT implication. And then there is, after the term of the sukuk, you buy back, another VAT implication. And during the period of ownership, this SPV should pay property tax. We have so-called property tax. If it's a land, you have land tax. If it's a property, you have property tax. So there are several, if you take into account this structure in isolation, it is doable. Yes, it's doable, but it's so expensive. You need to get special permission for government entity or for any entity to open an operation abroad, right? You cannot just simply open SPV in the UAE or somewhere. You cannot. So you need to have a special permission from the government, especially for the sovereign. Then of course, there are tax issues. So if you take into account the sukuk structuring and each and every step would that attract certain taxes, it doesn't make economic sense. So the legislation should change and allow this structuring aspect separate from the current taxation regime. Then it will make sense. So that change needs to happen. And we've been pushing for, together with some consultants, we've been pushing for that change to happen. So as and when this happens, then sovereign can issue sukuk. And alongside sovereign, some other corporates can also issue sukuk.
Yeah, no, that's very interesting. And I think also, I don't know if you're aware of this new AOFI Sharia standard that they're trying to introduce, the 62 with Sukuk specifically. We've covered that on other podcasts, but it kind of changes the whole dynamic of Sukuk from a credit to a more profit and loss sharing instrument, which is a completely different kettle of fish.
Just a question to you, I don't know, to your knowledge. Would this not deter investors?
It I mean, it's having an impact on the market. Like a lot of new investors who are not familiar with Sukuk are probably, well, the standard's still an exposure draft by AOFI, and it's causing a little bit, I would say, of concern in the market, particularly among DCM bankers and other investors and other market practitioners, in the sense that, yes, okay, it gets closer to the Sharia aspect of Islamic finance, but at what cost? Because the way the market works is a little bit different. So it could dampen appetite for Sukuk. So I don't know from your perspective as a DCM banker, if you put your DCM hat on from all those years ago, I mean, would you be in favor? What would you be saying to a client who has these kind of concerns?
Look, I back in days when I was a DCM banker, although I don't structure Sukuks, but as a DCM banker, obviously I helped the Sukuk issuance for Saudi Arabia back in 2017. At that time, we've had mixed views. I think it was more than 50% murabaha in Saudi Arabia's case in the 2017 Sukuk structuring. Some people, some scholars, because you need to give fatwas, right? Scholars didn't like the structure. They provided with negative fatwa. But if you look at the buyers at that time, it was more than 50% was international investors, not domestic, not the GCC investors. So for them, structure didn't really matter. They bought credit. So again, I'm not, my Islamic finance knowledge is not as deep as some of the other people in your podcast. But from what I understood, the sukuks that we've seen so far, which was acceptable for both Islamic investors and conventional investors, was the best, let's say, compromise between the two, right? You call it profit rate, you make sure that it's structured properly. Maybe you should increase the percentage of ijara, maybe you should decrease murabaha, or you introduce some other type of instrument there in order to make it more compliant with Sharia. But more complicated change, such as sharing profit and loss, will definitely deter international investors, which means that you lose more than 50% of your demand. That will lead to smaller market, smaller transactions. So again, I understand that there could be certain reasons, Sharia-related reasons for IOFI to introduce those changes, but I think it should be more evolutionary, making sure that people start understanding the differences, making sure that you grow the investor base sufficiently in order not to disturb the market. Then perhaps over a certain period of time, you may come to that ideal structuring. But if you introduce it right now, then this is not going to fly. I think this will definitely reduce the number and size of the transactions.
Yeah, I always say if you want to make like big changes, like very profound changes, you have to adapt the whole ecosystem. Like as you said, right, about the taxation thing, the AOFI Sharia 62 standard, which I'm referring to, and people can listen to my interview with Brother Omar Ansari, the Secretary General of AOFI. We'll hopefully get him back on the podcast later this year. It opens up a lot of other challenges like taxation, like legal transfer, ownership of assets, which I can imagine for a new issuer like an Uzbekistan or like another sovereign or corporate entity would cause a lot of challenges, in addition to the challenges they already have for structuring such a vanilla sukuk. So, I can imagine that'll be a challenge on the DCM side. Odilbek, as we bring the podcast to a close shortly, one of the things I wanted to talk to you about today was also about FDI. And, earlier on you mentioned about how Uzbekistan is attracting FDI from the Gulf. What sectors are attracting the most international investment? And also, are these more just portfolio flows or the actual real greenfield investments?
Mostly greenfield, because our capital markets are so far not that developed. So power sector is obviously number one. As mentioned probably in the previous podcasts, Aqua Power, Masdar are quite big. Mubadala is now also recently closed a transaction to buy a power plant, gas-fired power plant. We also have Saudi Arabian funds like Vision Invest, looking at various opportunities like airport and other important infrastructure assets. So Gulf investors are mainly focused on, they're also coming, buying state assets, but also they're more focused on infrastructure, which is I think great. And I would say outside of the Gulf, you see investors from China. China is growing in presence and in sophistication as well. Turkish investors, Europeans, the Americans, everyone is coming. And they're trying to get at the right time, because obviously population is growing, GDP is growing. That definitely puts a lot of emphasis to become one of the first in the market in their respective field, to make sure that they benefit from this growth momentum.
What would you say are the biggest practical barriers for foreign investors that still face investment in Uzbekistan? Are there still practical challenges that they face?
Yeah. First of all, lack of understanding of Uzbekistan. There's not many research papers out there, right, focusing on specific sectors. So I wish there's been more research on the mining, independent research, not Uzbek government research, independent research, like mining sector, like telecom sector, this sector, that sector. It doesn't exist, right? So people, they have to do their own due diligences, and
Why
it's not
do you
cheap.
think there's not enough research? Why?
Because I think we didn't have enough marketable instruments to start with. So once you have like Franklin Templeton's IPO will definitely help that, because then equity research analysts start writing equity research pieces, at least some of the top portfolio companies, right? And as such, there will be external research out there independently written about the specific sector or specific company. So we need to have more of these equity transactions in order to be able for banks to care enough to write these research pieces. Another barrier is, of course, unfortunately, bureaucracy domestically. We still have quite a bit of bureaucracy, unfortunately, especially when you are dealing with the government ministries, institutions. Of course, at the top level, everyone tries to cut the red tape, tries to make things work at the top level. However, at the ministerial level, the people who actually do the work, they have difficulties to fully comprehend what's expected of them, and that also causes certain delays, permits. One of the biggest issues is construction sector. I mean, I honestly think that the construction permits, construction activities should be more straightforward, more transparent, faster. So that's where it's a bit of a, causes delays. Land is still difficult to get. You can obviously purchase it in auction, or you can, if it's over $50 million, then you can discuss with the government where, you can, apart from building, hotels and apartment blocks, etc. I mean, if it's a proper factory or something, you can always negotiate with the government. But again, this is kind of difficult to get where you want the land. What else? I think there could be some, element of misunderstanding between the parties, especially, when you look at the mining sector. You get the mining rights always auctioned, and it's perhaps for foreign firms, they need to really partner up with somebody, I guess, somebody local or somebody who understands the local lay of land in order to participate in these auctions. You need to it's simple logistical things. You need to open your own account in this tendering system. You need to put certain money ahead of the tender starts. There are a number of things that logistically, I guess from the policymaker's point of view, I understand that you don't want to make it too easy for anyone to bid and fail to do a transaction, right? But so there are several issues. I think you get the same issues from, I guess, different countries, different emerging market countries probably have the same issues. One of the others, we understand that long-dated Uzbek denominated funding. So clearly, when investors come, they bring their equity, and then they try to, because if the product or whichever they're selling is from mostly domestic market, and they want to get funding in Uzbek sum as well in order to naturally hedge their currency risk. And there is lack of long-dated domestic currency funding for these FDI investors, and that will make it difficult for them as well. So, again, enough issues if you look for it. Obviously, there are solutions. There are companies, including our own consulting firm, help international investors in certain ways, especially if it's infrastructure or corporate finance, or we are also trying to get some M&A mandates. So we'll see. I mean, there's definitely a role to play in this niche market, but for those who can look through these challenges, there is a big market expecting with very strong growth prospects and an opportunity to invest in a country which will double in size of GDP in the next 5 years.
Odilbek, I was on Twitter yesterday and I saw a tweet saying, 57% of 2025 has already gone, with the rest of the year almost up. How do you see the second half of 2025 playing out and then going into 2026 and up to 2030?
Look, I think for us, as we deal with corporate finance, as we deal with infrastructure finance, infrastructure projects, we are really hoping that the reforms, the openness, liberalization attempt will continue as it has been. And I would expect it will be the same. Political stability will remain the same, so it will be relatively stable. I'm hoping there will be some ratings increases, so it will show the world that Uzbekistan is an improving credit. And I think that especially in the first half of 2026, I'm expecting this UZNIF IPO, Franklin Templeton, that will be a game changer, especially when it comes to equity investors, portfolio investors, because they don't have any asset to buy right now, which is irreclearable. So that will be a game changer, which I'm looking forward to also see and how this is going to impact the investment landscape in Uzbekistan. And, my expectation is that growth to remain very strong, inflation probably in single digits, FX stable, and the growth probably, higher than 7%. And for us, more business.
And just on that, you mentioned you're trying to win some mandates at the moment. So what other projects are you working on?
We always try to work on some projects. Unfortunately, not always it happens, but it is what it is. At the moment, we are trying to sort of, on a couple of occasions, we're trying to speak to one of the funds who invests in assets. So we're trying to see what assets could be interesting for them in Uzbekistan, and we're trying to find assets for them. In the other one, we're trying to see if there's a potential to establish private equity fund, which will selectively invest in assets and generate returns to shareholders with a 5 to 7 year investment horizon. Again, something interesting, something that takes our advisory to next level, but we keep ourselves always challenged. We like challenges. We like new things. We like new partners as well, but also we want to be part of this growth momentum in the ways that we can.
And what's the best way to find out about Infrasia?
Our website, so infrasia.co.uk.
I'll link it in the show notes. And what about you? Are you active on social media? Are you tweeting or going on TikTok and talking a lot?
Unfortunately not. Well, there is obviously LinkedIn I use quite often. TikTok I don't use. Instagram I don't use. Honestly, there's not much time. In terms of some podcasts, I do monthly podcasts in Uzbek, basically looking at monthly events of importance, mainly economics and finance. And then I do, once a year, twice a year interviews like that with you or with one or two others. So, this is, I want to keep it quite, the focus on the work and not active, not much active in other social media.
You want to walk the walk rather than talking the walk. That's very true.
Well, maybe I don't have anything against the others either. It's just my style. That's all.
I'll link all of this in the show notes. But Odilbek Isakov, this has been a really great catch up. Part 2. We definitely need part 3, maybe in 2026, and see how things have progressed. But yeah, I really thank you again for coming on the podcast.
Thank you, Hassan. Thank you.